Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking trash. Yes, we're talking about trash, not really talking trash. We're going to be talking about one of the largest waste businesses in the world, and that is waste management. I think you'll find some of the information that we have today interesting, and we're going to find a diamond in the rough here, and it might not be exactly what you thought it may be. So let's go ahead and begin with today's daily stock analysis. Thanks for joining me today. And if you haven't done it yet, go over and hit the like button, hit the subscribe button, because I give you lots of good information on a regular basis. And you're going to find that this is information that you're not going to find anyplace else except right here on this channel, on the Daily Stock Analysis. And as we begin in today, I want to remind you that this program is brought to you by my financial planning practice, which is Richards Financial Planning. And if you're frustrated with the direction of your finances, go over to richardsfinancialplanning.com and learn a lot more about the prosperous planning process. Now, as we finish that, let's go ahead and begin and learn a little bit more about the way that waste management is structured. I know that a lot of you may understand that it's a company that takes care of your trash, but how are they structured and how do they make profits? So let's take a look a little bit more deeply at that. The company in itself really has 5 different revenue sources. And of those revenue sources, what they're doing is they're focusing on revenue, cost management, profitability, the cash flow in itself, and then the capital placement. The company in itself is worth around $49.68 billion. Today, it ended up just a little bit at $117.76 per share. That's up about 2.21%. So as we look a little bit deeper at what's going on with the company, I want to remind you that we're still looking at stability, earnings, and competitiveness through all of this information that we're discussing. And the first thing that we always talk about is the moat. And let me tell you what, waste management has a wide moat. A moat is going to be that invisible barrier that's between this company and its competition. And yes, they do have proprietary assets. It's not like that they've got patents and things like that, like some of the electronic companies or the technology companies. But the proprietary assets is they have properties, the landfills. Those landfills are highly regulated, and you just can't go out and get a government to approve it because a lot of the governments are saying, hey, not in my backyard. So we look at landfills and some of those assets as proprietary assets. The company also has a significant cost advantage because of their route density. Think about it. They go from house to house to house. They don't stop. A community utilizes them. Some of the other moat aspects are the switching cost. And I'm talking about from a standpoint of a community, not just as an individual. If a community decides that they're going to go to another company, they're limited in what they can use. So switching cost is a moat characteristic. The other thing is size advantage. This is the largest waste business in the United States, bar none. I'm not sure about around the world, but I know that here in the United States, it's the largest one. And it's actually based right here in my hometown of Houston, Texas. Let's take a little bit closer look at the revenues in itself. And what I did is I actually went back over the if I can spit it out, the past 9 months, which ended in September 30th, and on February, I believe it's the 11th. Don't quote me on that. I know it's in February. That's when the next earnings call is going to be. But we went through the last 9 months ending in September. They had revenues at that point in time of about $11 billion. If you compare that to the revenues of 2019, they're actually down about 4%. That's really it's surprising with more people staying at home, but there's a lot of other factors in there because they have commercial business that might not be working as much, and the waste business may not be as profitable from that standpoint. They are very good in times that are down less productive of managing cost. In 2020, their costs and expenses were around 9.3 billion, and if we compare that to 2019 at 9.5 billion, they were actually able to reduce costs by 2%. Now, yes, they did have 4% less revenues, but they also reduced costs by 2%, which is really a good management trait in itself. And when we look at the diluted earnings for Waste Management of 2020, it was at $2.49 per share. Compared to 2019, it is down about 13%. But as we look a little bit further, there are some things that's going on inside of Waste Management, which is actually working to your benefit if you're a shareholder. The first thing is debt repayment, common stock repurchase, and cash dividends. Let's take a little bit closer look at actually what those were. The 9 months ended September 30th. The 2020 debt repayment was at $3.9 billion. That's billion with a B. Now you compare that to 2019, they're actually paying down debt really well. Now remember, that actually helps the bottom line. If they have less revenue that's coming in, they're actually paying out less because they have less debt. Another big benefit is going to be stock repurchases. And I know that some of you may have different opinions on the benefits or the detriments of stock repurchases, but in my opinion, stock repurchases help shareholders because the company that may focus on dividends does not have to pay out as many dividends. It's actually retained earnings back within the company. In 2020, they had stock repurchase of 402 million compared to 2019 at 248 million. And then we get to the real meat on the bone, and that is going to be what they're paying back to the investors, you all who are holding shares. Dividends of 2020 were at $696 million, and that's compared to 658. It's pretty stable. It's pretty stable from that point of view. And really, when we look at it, the dividends are awesome. Now, that little musical interlude was just to emphasize to you that they do have a 2% dividend, which is really good. And in putting together portfolios for people, I'll use a company like Waste Management because it has a regular dividend because they have a regular stream of income, and it's quite advantageous towards creating income. But I do have to remind you about all this information that the past performance is not going to be a guarantee of what the future results are going to be. Now, when we talk about stability, earnings, and competitiveness, the earnings are actually pretty good. And the chart that I put up in front of you that you're going to see here, I always like to see kind of a stair step in earnings that's going up. Now, yes, during the pandemic, we had it falter, but generally speaking, earnings have been increasing and they're predicted to continue increasing. But remember, the past performance is not going to guarantee those future results. So let's go back and take a look and see what the performance did over the past year. At $113.75 1 year ago, compare that to today, which actually, when I did it at lunchtime, it was 118.36. It actually closed at 117.76. So that's about a 4% increase over a period of a year. That's not including the dividends. So remember that if it paid out a 2% dividend, your net profit is going to be about 6% if you're looking at it from that standpoint. Now, what's Waste Management saying that the future is going to hold in store for them? Their earnings before taxes, depreciation, they're looking at guidance of around 28 to 28.5%. Now, I went back to Morningstar, and Morningstar is actually saying that they're thinking that that might be a little bit high. They're saying that the margin on this right now, this company is going to be more like about 17%. But a lot of companies will, when they're putting out guidance, they're going to be positive. So let's keep that in mind. But if anything, in double digit margins are going to be good, I think, going toward the future. They're also looking to continue to generate free cash flow in excess of $2 billion. And that's excellent. That's excellent for a company that you look at for dividends. Now, it's not possibly going to be the kind of growth that you would get from a Tesla or something like that, but they do have regular dividends, and the growth, look, it's a business that's not going to go away. You could have cars, computers, all that kind of stuff could just disappear, but we still have to have waste management no matter what. So with that in mind, also remember that guidance is just going to be guidance. It's not guaranteed. Now, just to take a real quick break for a moment from all that information and remind you about our sponsor today, which is Advice for Life Insurance. Everybody needs life insurance. So if you need life insurance, you can find the best life insurance at the lowest prices in less than 5 minutes. Go over to adviceforlifeinsurance.com and you can find that. Now let's take a look at what the Bulls and the Bears are actually saying about waste management. The biggest thing is this is a stable business. It's just like I mentioned to you, waste reclamation has been around since the Stone Age. It has to be there. But there's also regulatory advantages for a company like Waste Management. A company can't just come in and say, hey, I'm going to have a landfill here. You have to be able to have regulatory oversight and approval. It's an established business, which is good. Acquisitions have been fueling the company's growth. They did an acquisition of a company called Advanced Disposal, and that's actually leveling out currently. And if they continue to profit from acquisitions, that may be something that will continue on. And we're going to talk about a small company that possibly could be a target of an acquisition in the future. So we'll get to that in just a moment. Also, look, they have really successful management. A, they have stabilized cost, and B, they have improved pricing, which is really very good for a company. But as with all companies, there are bearish aspects also. And probably the biggest bearish aspect is that sizable acquisitions are rare. And when you've got a company that's the size of Waste Management, you have to have a pretty large acquisition to be able to impact the value of the company. And that's not something that you find a lot. Another bearish aspect is margins are going to be hampered because of recycling cost. A lot of government regulation and community standards for recycling is something that's putting pressure on the margins, the profitability of the company going forward. So as I said, I don't believe that you're going to have anything like Tesla performance out of this, but it's a pretty good performing company in general. When we look at the valuation, you have to ask yourself, is it a good stock to get into now? So what we do is we turn over to companies like Morningstar that give us their prognostication of what the value is actually going to be and what's it worth. Morningstar is saying the fair market value for this company is $103, currently selling at $117.76. I know it says 79 here, but when I did it, it was 79, but it closed today at $117.76. That is actually selling at a 15% premium in Morningstar's opinion. Now, when we look at what some of the other analysts are saying about Waste Management, with 16 analysts out there that are giving opinions on this company, that's a lot, by the way. In the past 90 days, to have 16 analysts that are actually giving their opinion on this company is significant. Out of those 16 analysts, 7 of them are actually saying that this is going to ring the bell there. It's going to be a strong buy. But then again, hey, you've got one that's a moderate buy. You've got 6 that are saying hold. And then you've actually got one that's saying sell. I don't know which analyst that is, but let's take a look. Let's take a look and see. But first, we want to look at the competition. Okay. There are 2 big companies in the United States that manage waste. There's Waste Management, which is worth about $49.76, let's say $50 billion. Let's round up. Then there's Republic Services, which is a competitor. It's worth a little bit less at 30.51. And when we just look at the spaghetti graph that I've thrown up on the screen, you can see that they're pretty close in comparison. Now, let's look for the diamonds in the rough. The diamonds in the rough are going to be some of the smaller companies. Waste Connections is a company that actually has done better than Republic Services and better than Waste Management. And you can see that that's here. But there's one more diamond in the rough, and that is Casella Waste Systems. It's a much smaller company at $3.1 billion. Now, Casella could possibly be an acquisition target of a company like Waste Management. It's small enough. It's still at $3 billion. It's considered a small cap company, and it's actually done very well. They're more centralized on the I believe, the northeast part of the United States. They're more regionalized. So this is a company that's done pretty well. It's actually done much better than any of the other waste services companies. And maybe we'll reserve this one to talk about on another day when we talk about small caps and how small caps are competing, especially here in the month of January, where we try to focus on small caps too. But today, we are focusing on waste management. Now, let's look and see what the analysts are actually saying out there. The most pessimistic analyst is Argus. Argus is putting a buy on this stock, but they're putting their target in between 110 and 122. Remember, today they closed at about 117.76. The most optimistic analyst out there is Oppenheimer. And Oppenheimer is saying that this stock is poised to outperform. They're putting target price of this between 123 and 128. So they're looking for a lot from this company. So there's a wide range in there, but generally on the bottom at 110, the top around 128, currently selling at 117. We're pretty much in the middle of what most of the analysts are saying. So I think that it's got some good possibilities going toward the future. And remember, as we wrap up today, there's three things, friends, that we're looking at. One is we're looking at the stability of the company. The other is we're looking at the earnings of the company. And lastly, we're looking at the competitiveness. I try to keep it simple for you. If you keep it simple, it's not that complicated. I know that may sound redundant, but stocks don't have to be complicated. Plus, also, remember, we're not trying to day trade here. I'm trying to give you information so that you can create portfolios that can either give you growth, income, or basically give you some diversification of your assets. Hopefully that gave you some help in determining which stocks may be helpful to you. And I'd like to ask you for your help on two things. One is, if you like the broadcast, tell somebody else about it. Number two, tell me what your favorite stock is. Tell me what you would like me to look into. And I can't guarantee that I can do all of them. Today was done for my friend Edward. Edward, I hope that this was helpful to you. So have a great day, and I will see you all. I'll see you all tomorrow. Have a good evening as I go over here to the end cut and ask you to please listen to the daily disclosure. Have a good evening.